Good afternoon and happy Monday, everyone. Welcome to Stock Market Today. Ali Corman, Justin Nielsen here with a look at what went down in the market today. And Justin, growth stocks seeing some damage again today. What do you have for us?
Yeah, so we'll go ahead and take a look at one of the stocks that was hit hardest on the growth side, and that is InMode. But then we'll also take a look at some of the setups. There was strength in energy, and some of the steel stocks are looking interesting. So it's a matter of whether or not these pullbacks can turn into something. So we'll take a look at Devon Energy and Nucor steel.
That we will. Well, now let's take a look at the major indexes. Here is the NASDAQ composite, which finished the day down less than 0.1%. And we also had on the upside, the S&P up about 0.25%, the Russell up about 0.5%, and the Dow leading today up about 0.75%. So the NASDAQ definitely the weakest of the bunch here and coming below its 21-day line intraday.
Yeah, so on the negative side, yeah, it's definitely challenging that 21-day moving average line. But on the plus side, it certainly came up well off of its lows. It was looking a lot uglier earlier in the day, and it wasn't like tech was completely getting hit. I mean, you had a lot of the semiconductors that were looking okay. There were even some select names in some of the computer software enterprise, which has been an area that did get hit today, but you had stocks like Asana and ZoomInfo that were doing okay. So it was very mixed. But you should take a look at FFTY because, again, this is a good proxy for growth. And if you were feeling like your portfolio got hit, this might have been part of the reason why. It was a lot of the stocks that make up the IBD 50, these growth, high growth names. Those were the ones that were taking it on chin today. So it's certainly one of those things where you have to be a little bit more protective of your portfolio. And that's something that we've been talking about as FFTY was getting to highs, as the NASDAQ was getting a little bit extended. This is where selling into some of that strength is very beneficial. Now, on the flip side, you mentioned the Russell 2000. You take a look at the Russell 2000, and we often look at iShares Russell 2000 ETF, which is IWM, and you see that one, it's been pulling back lately as well, but it seemed like it got supported its 50-day moving average line. This has certainly been the lagging index, but because you had energy and financials, outperforming today, this is one that did a little bit better for the day.
Okay, well, let's check in on InMode, INMD in the medical sector, having a tough day, down almost 10%. Heavy volume behind the decline today, but it was at least, Justin, able to find support at that 50-day line and that 120 round number.
Yes. So the question here is, what is your exit strategy? Are you okay sitting through a base on this one? Because at this point, this was a lot of damage today. Whenever you have the largest point decline in a day, that's something that we do use as a sell signal. Now, if you take a step back to the weekly chart on this, you see that this has had a very strong run. And even if you had just gotten in at this last cup with handle pattern that happened in the just a few months ago, you were still up 50-60% from that level at its peak. So it's, again, when you have such a strong move in such a short period of time, you can certainly sell into strength. And that's what Leaderboard was doing. Leaderboard took off a portion of its position on August 27th. That was right around 131. And look, the stock went up higher and you could have been kicking yourself saying, well, gosh, what a stupid move. But then here we are a couple weeks later and we're underneath that point. So you just have to decide, what kind of investor are you going to be? Are you going to be selling into strength and sometimes miss out on the opportunities that come from that? Or are you going to be, waiting for that weakness to come in, and you're going to take a larger drawdown potentially? So two different strategies, both. You can make a lot of money doing either one of those, but you have to decide what kind of trader you are.
Right. And I think you could also go with a hybrid approach. If you're selling in thirds or quarters, maybe you take some into strength, then wait for a close either below the 10 or 21 day, and maybe you're using that 10 week as your final sell.
That's such a great point, Ali. It doesn't have to be an all or nothing decision, right? You can always sell in portions. It's not like you have to do things in 100 lot shares. That's something that is, decades past where that was important. You can do it however many shares make sense to you, take a little bit off, and look, if it comes right back, you can always add those shares back. If it, ends up getting support here at the 50-day moving average line, as great as it was that it came off well off its lows, that was still a pretty bad day.
And this market has been so tricky. So we've been noting how taking early entries, of course, but taking those profits into strength instead of waiting for most of those sell signals to be on the defensive side could be helpful. But at the same time, we are seeing leading stocks oftentimes, not always, but getting support at those key levels. So you don't want to be completely shaken out if you are in a true winner.
Yeah, and that's where the selling into strength helps a little bit because you don't take as much of a hit on the downside when that drawdown comes. And then those early entries just help you kind of build that cushion. Exactly as you said, Ali. Great point.
Right. And let's now take a look at an oil and gas stock because we were noticing the strength in that area today. So here's Devon Energy, DVN, up 3% for the day. And on IBD Live, we were taking a look at a trend line here. Looks like potentially a little bit of resistance still at that level, but a pretty compelling setup here, Justin.
Yeah. So at this point, look, if growth continues to come under pressure, you have to look at other areas. And that's been one of the things of this market. You could certainly just go to cash and just, raise cash as your defensive posture. But what's been happening a lot of times is you have this rotation underneath the surface. And that could be what's happening right now. So I just wanted to bring up a couple things that we're setting up. Now, Devon Energy, one of the things I liked about this stock was the fact that this was one of the first ones to get above that 50-day moving average line. So that's kind of giving you some strength. We've also been talking about Denbury, ticker symbol DEN. And we talked a lot about this on IBD Live today, where if you compare this to the other U.S. Explorer and Producers, XOP is the ETF that represents that. These were definitely getting above the 50-day moving average line quicker. Now you see that XOP looks actually a little bit of a stronger move here than Devon did. So there's certainly some strength here. OIH is another one of the ETFs that you can take a look at. That's the oil services. So that's just getting up to the 250-day moving average line, but a very strong move, about 5% today. So a lot of strength in the oil area. And I should also mention that we did put on XLE, which is the Energy Select Spider ETF on Swing Trader today. We'll see if it gets resistance here at the 50-day moving average line. That is the concern, in which case we can back away fairly quickly. But again, we just want to be ready for a potential rotation.
Right. And speaking of that rotation, one thing that's really great about the MarketSmith charts is you can see right here very clearly and easily the industry group rank. So right now, ranked number 46 out of 197, the exploration and production group. And every Monday on IBD Live, we are talking about the shift set we are seeing in the industry groups. You can even pull up the industry group chart as well, which is another handy feature of MarketSmith. And speaking of, Justin, it is MarketSmith free access week. So for those who want to get their hands on these research tools that are made available to them through MarketSmith, this is the week.
Yeah, absolutely. And it's funny because a lot of times we're just using the charts, that's what we're showing, but a lot of people don't realize how many benefits there are to this product, the industry group analysis, all of the fundamental analysis. I mean, we usually talk about that a little bit, but the reports that you have access to, the alerts that go off, and let you know, hey, this is something that's breaking out, the pattern recognition, there's just really so much there. And the free access is a great chance for you to take a look at it. There's so many webinars that will help educate you on all of the different features that the product has, because we really, we just kind of show the charts and that's about it. But there's really so much more to the product.
Oh, there's so much more to the product. So we hope everyone checks it out. And an easy way to get to that is by going to investors.com/MS free access. So something to let you guys know about. And let's wrap things up with a look at Nucor in UE, down about 2.8% today, but support at the 50-day line. So a potential setup here, even though this is a stock that we did see a round trip from a breakout.
Yeah, so this is one where you've got to kind of weigh the different positives and negatives here. It was a round trip from a breakout, but it's now getting support at that level, which is also support at the 50-day moving average line. And again, if there's this rotation that's happening underneath, where is that money going to go to? The Fed is still pumping a lot of money into the market and the economy. So you have to just think, that's one of the things that's fueling this whole buy on the dip mentality. As soon as the market comes in a little bit, all these people are like, well, where else am I going to put my money? And the money just goes flooding right back to the market. And that's why we've had the indexes getting a lot of bounces off their 50-day moving average lines or even their 21-day moving average lines. So, if that's going to happen again, now you have to be prepared for it not happening, which means you have to have an exit strategy. And you don't want to just be like, well, I'm waiting for the dip to come, because sometimes they never come. But if you are looking at some of these stocks, you have to be just prepared for what could be leading next. What could that rotation go into? And that's where I look for the stocks that have been pulling back, that have been a little bit weaker. I personally like to wait for the strength to come in. I like to see that evidence of strength. I like to see the bounce. I'm not going to buy on the weakness on the way down. I'm going to wait until I see some evidence that it's starting to make its comeback.
All right. So Nucor won for the radar in the steel producers group. All right, Justin, thanks so much for all of that fantastic analysis today. Once a reminder, make sure you check out MarketSmith this week with our MS free access at investors.com/MS free access. And if you have any questions, the team on Twitter would be happy to help you with that. Direct all of your questions, though, to Scott St. Clair. That's really the person you want to talk to at Zen in the Markets. Fire away.
He's going to love that you just told everyone that.
All right. Well, thanks so much for watching, everyone. We will be back with more tomorrow morning on IABD Live, where we will be joined by David Ryan, who is a MarketSmith extraordinaire, loves screening stocks. He's done the MS iPad demo for us, which was really cool as well. So maybe we'll have to see if there's something up his sleeve for tomorrow. So we hope you join us at investors.com/IABD Live. We'll see you there, everyone, and right back here tomorrow.